I started it myself the spring of 2017. We were about 45 headcount, $10 million run rate. For most of the history, I was like the lowest paid person in the company.
In this episode, Joe Manganelli breaks down how he built and sold an accounting firm in under 7 years and what nobody tells you about the exit.
I think at that point, our slowest growth year was like 75% year over year in terms of like top line revenue. We got to like 3 days within closing and it fell apart. Risk is not an emotional thing. Risk is a price.
If you're building an accounting firm and thinking about scale, exit, or both, this conversation is for you. Welcome to the Growing Your Firm podcast. Hey everybody, David Cristello here, founder and CEO of Jetpack Workflow and host of Growing Your Firm podcast. Today's guest is Joe Manganelli. He was the founder and CEO at Calculate. So he started the firm, sold the firm in under 7 years. He's now taking on a bunch of really interesting projects, communities, software, which we're going to talk about. But before I hit record, we're talking about what makes the most sense for today's interview. And no surprise, we're going to talk about Joe's journey. Why did he start the firm? What were moves he made that led it to be in a place that was even acquirable in under 7 years? How did he think about acquisition and pricing, building up the team, and so much more? But first, Joe, welcome to the show.
Yeah, thanks for having me. This is exciting.
Yeah, absolutely. Before we get into the start of Calculate, let's just take everybody to kind of like the where it was right before you sold. What level of scale did the firm reach when you had sold the business?
Yeah, and just to set the groundwork, I started it myself in the spring of 2017, sold the business in late 2023, and we had scaled up pretty quickly, especially for a business that hadn't taken on sort of outside funding. So we were kind of humming and growing, and then by the beginning of 2023, we were about 45 headcount, or just under 45 headcount, a bit under kind of a $10 million run rate. And, things were going pretty well. And, everyone builds their business a little bit differently, but I had kind of built mine as like a top line growth business. So I think at that point, our slowest growth year was like 75% year over year in terms of like top line revenue. We were a modestly profitable business. We had built our own software internally, which is kind of a separate thing. But yeah, that's the kind of growth and scale that we had kind of gotten at when I kind of went to market, so to speak, in early 2023.
That's amazing. There's so much to unpack there. The first thing I want to ask, you said we're kind of a top line growth business. We've done 300 some interviews. I don't think anybody's, even if they've operated that way, didn't necessarily describe themselves strategically in that way for their firm. So is that something going into Calculate, you're like, was that kind of day one? You knew you were going to be optimizing for top line growth, or how did you think about that in the early
generally, I think I built an equity growth business. Like I didn't particularly pay myself very well. I didn't prioritize profitability. I think I just love building and I love being an entrepreneur and I loved opportunity. And maybe it's partly the middle child in me that I never want to say no to anyone. So I'd like to take on a lot of opportunities and a lot of deals. Obviously if things didn't fit or they weren't going to be good long-term, we didn't take those on. But yeah, being able to say yes. And I loved hiring a new person and being a positive influence and sort of, part of Calculate also was a bit of a hypothesis of like, could we build a services business that treated its people like humans? And so I think through that gained a lot of opportunity. And I just kind of always went for not necessarily the most profitable opportunity. Maybe I overpaid someone here or that, or overhired in this place to kind of build, a really strong infrastructure for a place to grow.
So you mentioned the profit margins being like maybe something you weren't completely optimizing for. What was the average profit margin during your journey of scaling up?
Yeah, so I'd say like market for businesses like this, like a good one might be doing 25-30% margin, and sort of the outsourced CFO, outsourced accounting business. We were a bit lower. Typically, we were like in the teens. So we were growing a little bit faster. Obviously, you have to hire ahead of things to that nature. But we were doing, we were kind of doing that kind of rate. And then on top of it, we had been building our kind of own proprietary software internally. So that's kind of the margins before we started spending stuff there. So the actual profitability of the business on a whole was, I don't remember, but it was a bit lower than the kind of high teens, so to speak, if it was just a services business.
Okay. So to be clear, the teens, so you're saying when somebody was like looking at potentially acquiring it, Could they or could they not look at that 15% and say, well, that's because they're spending so much on internal software. If we just stop doing it, it's going to shoot back up to 25%? Or
I think it would more have been the sense of like we were doing, let's say, 15 to 19% EBITDA margin before spending on the software. So that's kind of what it is. But if we think about it, if you're growing at 75 or 100% per year, you could argue that a 15% profit margin or 10% profit margin is actually pretty good.
because you have to hiring ahead. I mean,
Yeah. And that's kind of the challenge with the business is you have to build the infrastructure before you can go and make the money. So, in an instance like that, I've got, I have to hire ahead of the clients that I sign. I have to I have to have a recruiting function or be spending on recruiting to bring people in at that rate. So yeah, so you're kind of running ahead of your revenue a little bit, and that's going to obviously impact your profitability.
yeah. If you don't mind sharing, you said like you didn't even worry about paying yourself very well in the early days. What does that mean specifically?
I mean, I sort of quit my job and kind of gave myself a 6 month run rate. Said like, if I can't do this in 6 months, I'll just get a regular job or something again. And so within 6 months, I was actually hiring my first headcount, and I just kind of paid myself modestly, enough to kind of cover my mortgage and sort of like expenses that I needed to have. But like didn't I wasn't focused on like making myself the highest paid person at the company. In fact, for most of the history, I was like the lowest paid person in the company because for me, it was more interesting and fun for me to put that money back into the business for different opportunities than to necessarily pay myself.
Yeah, that's super interesting. So day one, calculate. We got to grow. How did you think about initial acquisition, packaging, pricing, and what happened that first 6 months where you're like, time to hire somebody? How are you getting all these clients? What are you charging them? How do you know all this stuff?
Yeah, I mean, I don't know. I have a little bit of an atypical background. I went to school for engineering, found my way into finance, learned kind of FP&A from that, and then thought I can kind of sell myself to other people. And so that's when I started Calculate. And so trying to just went out there telling people what I did, trying to raise awareness and
Telling
get
who? Like, did you have a big network? Was it a
no, I
specific?
really didn't have a network. Like I never worked for a client. I had never sold anything. And think I had interviewed one candidate. So like my skill set wasn't very refined. And so what I just did was elbow grease, man. Like I went to a million like terrible events and I would come home with 100 business cards and like maybe one or two of them were worth it. And sort of just like in the beginning, I think any type of business services or product, you're just playing the awareness game. How do I get more people to know that I exist and tell them what I'm doing and see if there might be a fit there? And then once you are in a conversation, getting them to trust you. People tell me that I find me relatively trustworthy. So, that part was maybe a little bit easier on my part. But then, yeah, just kind of building up. My model was always brick by brick, like get one client, get a second client. Those little incremental improvements really build scale over time.
Yeah, and so in the early days, like what what would you say, like looking back, rough idea? What was an average number of events you would attend in a given week? Like,
Oh, I would go to like two or three kind of evening events a week, and you think about it kind of you have maybe Monday, most of them are Tuesday, Wednesday, Thursday. So I was basically Tuesday, Wednesday, Thursday at some event or some happy hour or something like that, trying to kind of get connections and that sort of thing. And that was like inefficient. And I didn't do that forever. I kind of did that for the first year until I kind of built up my network a little bit.
okay, and I guess well, you're in New York. There's a lot, but you still have to find them. So did you find anything like? Were you just asking people? Were you just browsing the internet? Were you going to meetup.com, being like this happy hour, and if it just said business anything, you're showing up, or like what?
Yeah, I think it was also a time where there were a lot of like meetup was kind of coming around, and there were a lot of events like you could search on the internet. It was also pre-COVID, so people were still out a little bit more than they are now. And then you go to an event, you meet someone, and they're like, "Hey, I'm going to this one next week" or something to that effect. So it's not like one silver bullet, but sort of like cobbled it together, if you will.
Yeah, you're finding some fellow event hoppers. You're like, oh, you're an accountant. I'm a lawyer. I do two of these a week or something like
Yeah,
that.
and it's funny you say that. Like some of the early, I talk kind of negatively of it, but like you'd meet 100 people, and how I think about it is like my clients weren't actually at those events; they were working on their business at the time. They don't have time to be going to events like that. Like those events are a lot of the wannabes, and it's funny. Like I would meet other people who are at early stage in their process too. So my longtime attorney, I actually met at an early event like that because he started his firm around the same time I did. We
Oh,
kind of
wow.
grew together over that time, and I still rely on him today. 8 years later, 9 years later.
But you did get that initial base of clients, your first 5 or 10 clients from just networking these events.
Yep, yep. It was mostly a grind, or like a friend of a friend had a company and it was like, okay, can I impress them? And, they were pretty small at the time, or small to what ended up happening. Like, I would take on a $500 account, or like, and just like try to really cobble it together. I mean, my first client was an old recruiter that I had used years before, and they were looking for sort of like a CFO, COO role. And so I kind of stepped into that for a few $100 a month. And then I did get a little bit of a logo and like paid an agency. And part of my thing is like finding an agency that I thought would be a good client of mine. And I literally picked them and like hired them to do my logo and stuff. And then months later, I was able to convince them. So they were like my third or fourth client or something like that agency. So, some of it was a little strategic, and giving it a little bit of a gamble there to make it work.
How much revenue were you doing 6 months in that you're like, I need to start hiring somebody?
Yeah, I think it was. So I think maybe my difference was I didn't wait until it was the time that I needed to hire. I was like always looking ahead. And so I knew that I didn't have kind of the CPA background. So I wanted to originally bring on a partner, but ultimately hire sort of a CPA who could like validate me. So early on, my first hire, she had been at PwC and was a CPA and knew taxes. And so like I could go into a room and say, hey, I'm Joe. I used to work at Goldman Sachs. I know the finances. This is Jillian. She used to work at EY, PwC, and like she knows the tax side of it. And so it was like a holistic kind of thing there. And so my thing was like I knew I needed that. I didn't hire someone because I had too much work. I got the work so that I could enable the hire. And so it was
Yeah.
probably like 6 months in or so. And I was doing like 30 grand a month, 20, 30 grand a month in revenue, let's say 20, 25. And that's when I kind of was like, able to hire, or I saw that coming, and I hired my first person around that time.
And at 25K a month, like my initial impression was you're like, you need $100 a month bookkeeper. I'm your man. You need a COO, but you weren't. But were you priced at 25K a month? Did you either have a lot of clients, or were you starting to pick up $2,000, $4,000, $6,000 a month CFO kind of
Yeah,
clients?
there was like one big one that was like 8 grand for a couple months, but didn't stay around long. And then there was like another kind of one. So it was like cobbled together. There was no like model client early on. So I'm not trying to dodge that, but I had a couple for like $2,500, and then I had one that was like 8 grand for a couple months, and a couple others that kind of like snuck in there. But maybe 30 grand. I probably had 10 clients at the time. So
Yeah.
the average was 3 grand a month or something like that. And then that would come down and go up, and it would ebb and flow.
Yeah. But the person you hired, I mean, she was a pure employee, or was she a partner?
She came on as an employee with the understanding like if things went well, there'd be equity at play here. And I think probably a big differentiating factor for me, and I hear this when I talk to folks today, is like everyone when they're looking for their first couple hires are always looking for someone who's like junior or administrative, or like I need this to take work off my plate. And the thing is, rarely does a junior employee take that much work off your plate. And like I didn't realize it at the time, but when I hired, my first three or so hires were all people who had more experience than me. So like
Yeah.
hiring Jillian, I was bringing on someone that I think could help validate us in the market. But really what it enabled me is like she was able to run accounts on her own. And so she was able to run like that agency. She basically ran that agency account on her own. And I didn't have to be like in the weeds there or checking her work or that kind of stuff. And so it freed me up to do other clients, biz dev, hire the new person or whatever. And I'd say like, if I have one recommendation at a few minutes into the podcast here, I would say like if you're at that stage, hire someone who, has as much or more experience than you and can like run accounts or can run pieces of the business that you don't have to be bogged down with the details or checking someone else's work, that sort of thing.
Yeah, I love that. And you're right. I mean, like in so many instances, just do the opposite of what everyone's doing, and you're gonna have some success. I was talking with a firm owner yesterday, and she came from not the accounting space. So when she started, she kind of did everything quote unquote right, but that's because she hadn't come from like a pure CPA accounting background. So like She got paid up front, standardized very early on a certain tech stack. It was like, but she's like, but why would I do it any other way? Like,
Yeah.
why would I not do it this way? And then when she started talking to other firm owners, they're like, you told people no because they're on zero, and like you got paid up front. She's like, yeah, what do you do, right? And they were just like, wow, like how did you do that? Like
Yeah.
who are you? Um, when did it change for you? Kind of the growth trajectory. You're doing these events, but these events sounded very. I mean, it's just so much like sweat equity. It's just like I don't know what's going to work. I'm just going to go to as many events. I'm just going to say yes. But a lot of your best clients are not going to events because they're just grinding Tuesday,
Yeah.
Wednesday, Thursday, and you have to do all these things. It feels like in some ways, even though you're gaining traction, very inefficient. So at what point in your journey, if at all, did you switch from
Yeah.
Tuesday to Thursday happy hours to some other model for obtaining
Yeah.
clients?
So I had kind of like the eureka moment was I had met a lawyer at one of these events and he referred me to one of his clients. And that became like a really great client for me. And that's sort of when the light bulb went off. It's like that was like almost an easy sale because I was referred and stuff like that. And we all talk about the power of referrals. And that's sort of when the light bulb went off. So then what I did, and I did a little bit of outbound work, but it just wasn't effective. So then what I did was I shifted my mindset and said, like, what if I create a network of people who are kind of going to work to me for me, if that makes sense? And like, not in a way that I'm only expecting to gain, like I'm giving too, but a network of people who are working with my clients, especially the decision makers of my clients. And so what I did is over the next 5 years or so, I really just continued to build out this network of like startup attorneys, for instance. Like I worked a lot in startups. So like as they're putting together the seed or series A documents, the books better be clean. Well, they'll pick up the phone and call Joe and his team can do the books, right? Or like HR attorneys or large accounting firms that may have big audit departments. They can't do the book cleanup. They can't do the ongoing CFO work because of the independence issue. So they'd come to me. So then I really developed just this like really great network of folks who were consistently feeding me deals. And I was feeding them deals too. If my clients needed a good attorney, I was referring them, right? And I think what's great about the referrals, if you break it down, is like kind of the sales, like two questions you're asking or answering, right? Like one is, do you have a fit? And two, or do you have a need? And two, am I the right fit? And the answer to number one is pretty much answered, or is pretty much there because we're talking. If we're talking, you clearly have a need. I didn't find you, you found me, so you have a need.
Mm-hmm.
The second is, am I the right fit? Like that's kind of half answered because someone we both trust put us together. So like my close rate was 50, 60+%. And the ones that didn't close were maybe because I didn't want the deal or it doesn't fit. Like, so we had a really high close rate. I didn't spend much time on like bad sales calls. Most of the sales calls were pretty high quality. And the close rate was pretty quick. And like, then refine the sale process a little bit to really tighten that up. And that's kind of how it went. So I think just really that creating that like relationship network that just fed our business in terms of qualified leads.
Did you have an exclusive relationship referral agreement with like any of these like startup attorneys, right? Because you said you fed deals back. So when you first talked about it, I'm like, oh, maybe Joe had a small army of startup lawyers kind of in his referral. But then if you had 10 or 12 of these, then how do you do deal
It
flow
was less,
back?
man. I never paid for a referral once. Like I didn't have any paid relationships in that sense. And so I would try to shoot for like 3 to 5 quality ones of each type. So like law, like, corporate lawyers for startups, and then like maybe a couple like HR consultants or HR attorneys, and then like big accounting firms, and then other peer companies too. It's like they can't take on the deal. And so it wasn't that many. Maybe the whole network was like 20 like active, very busy relationships. And then, yeah, like even if it wasn't necessarily, I may not necessarily have a deal to refer them, but I might meet someone who could be a good partner to them or good, networking opportunity or something like that. But just like continuing to try to provide value to those people.
Yeah. How would you initiate that conversation? Like, I think sometimes we talk to our community and it's like, gosh, I want more referral partners, but you don't want to come in and you have to kind of like sniff each other out. So what was your approach to first selecting them? What things did you see online or at the events that you're like, okay, they seem high quality, high caliber people, and would you start to slowly build that relationship where you started then having a referral relationship?
Yeah. So generally you get introduced to some attorney, let's say, you get on there and you do the classic, okay, tell me your story. You tell me, I'll tell you my story kind of thing, talk about their work, kind of how they get into it, whatever. And then at some point, just ask them what they're looking for. Like I have very much that like give to get mentality. Like I can't expect someone to give me something if I'm not willing to give them something first. And so, whether it's 5 minutes before the end or whatever, just like explicitly be like, hey, who's a good introduction for you? Tell me exactly what you're looking for. And I'd write it down or whatever. And then after that call, I would actually follow up with that. And I would always try to have like 5 or 7 touch points to really talking about like how do you build it to that point. And so, you have an introduction, then you have the call. After the call, maybe there's a follow-up note with some one pager or something. But then, I would look through my little Rolodex or other people or across my clients. And if there were, 1, 2, 5 kind of introductions I can make, I would make those introductions, right? And then I'm sort of another touch point where once those people get together and talk, they're like, first question is like, oh, how do you know Joe? Right. And then all of a sudden I'm not even there and they're talking about me, right? Or our company or whatever. And so I just try to do that. And then you build that up, you give some introductions, you hear back from some of the people you introduced. How did that go? And then if that person isn't really reciprocating, then they're probably not going to be a good partner to you, right? But if you hand over a couple, they hand over a couple, and then you kind of get it rolling, it becomes pretty clear that that can be a good partnership. And then, mostly just working with other entrepreneurs like yourself, the right-minded ones, they're not going to be looking to get paid to play, so to speak. They're happy to, support you because you're supporting them.
As you were growing, what were some of the breaking points from a headcount perspective? Where did things start to become harder from a communication standpoint, management standpoint, leadership? You said you were from 0 to 45 people. So what were some of the milestones where you're like, whoa, we need to change our org structure, our planning cadence? What did that look like for you?
I think a little bit more about like the kind of psychological side of it, more than just like, oh, my team should be grouped into industries or whatever. And we did that. We grouped our teams into industries. I think like for me, kind of being 10, 15, even 20 headcount was like a place I really liked to be. I felt like I was building. I felt like I could touch every part of the business, but had competent people working. Very much like being 15 and being 30 to me are fundamentally different places. I think when you're 15, everyone gets you. The people who joined when you're 10 or 15 headcount like are kind of along the ride for a startup. They have patience that it will be bumpy. They know you personally. When you're 30, like they're like those people are kind of like joining for a job, if you will. And like there's a very much different mentality. And I kind of mentioned like I tried to build a company where it treated people like humans, and it almost like I'm still trying to treat you like a human, but you're seeing me as an entity. And like I felt that a few different ways. Like I was always the first interview call like after the screen, but then I always met every employee for like an hour on the first day, and we would just talk and get to know each other. And I remember probably around employee number 30, one of them said, oh, I've never had a call one-on-one with the CEO before. And like, that was so weird to me that like, I didn't think of myself as a CEO. At the time, I didn't call myself CEO. That wasn't even my title. But like, that showed me that they weren't seeing me as Joe. They were seeing me as like this entity within the company. And I think that's a major difference. So I think like 2025 is really where that starts to switch. And then also I'd say, being in person, having a tight team early on, I was able to manage the firm or manage the company kind of implicitly. And you can't do that forever. And I kind of realized a little later that like, oh, I really need to be explicit about my expectations, about the direction we're going, about those types of things, because I'm not as close to everyone as I used to be, that they can just feel it and sort of operate it. And also that sort of mindset when you're joining a larger company is not necessarily that you're like in the canoe rowing the same way.
Yeah. What were some of the things you had to adjust either for yourself or organizationally once you surpassed like that 30 people? When you were getting folks that are like, I've never talked to the CEO before, you're like, well, I don't view myself as unapproachable. Like I don't put myself in this class category where you're like, can you believe you're meeting with me? What, you're like, that's not because you were so tight knit with everybody. So what things you have to change culturally, personally, organizationally, because then you obviously added then another 15 people thereafter.
Yeah, I think like it's very much a personal mindset. Like I'm a middle child, like I mentioned, most of the people I hired early on were more experienced than me, and so like not that they didn't I don't think they looked down to me, but we had a little bit more of a peer relationship. Like, yes, I had the accountability as the founder owner, and like it was on my shoulders, but we like were kind of all like in the canoe together. So I think for me, realizing that the newer hires and those people don't necessarily feel that, they do see me as some sort of like more wise, capable sort of person that I didn't maybe necessarily feel myself. Is sort of an adjustment. I think like the desire to have everyone like you is like something that was really present for me early on, and sort of like having to shake that.
How did you how did you see that?
I don't
Middle
think I
child,
ever did, man. I don't think I ever
middle
did.
child,
Like,
middle child. Yeah.
I think like having a negative glass door review, like still, like I was talking about this someone the other day, and like, do you ever read them? And it's like, no, they hurt my feelings. Like, I don't, and like if someone is frustrated, like I think I tried really hard to make it a great work environment, and you're not going to please everyone, but like it does hurt my feelings to know that like it wasn't the perfect work environment for everyone despite how hard I tried.
Yeah, and I feel like, well, I speak for myself now, and again, middle child over here too. Um, the wanting to create an atmosphere where people can do their best work, having a tendency where you want to have people feel comfortable. Maybe I edge more on like people pleasing side to a fault, but then it can bite you where all of a sudden I would say I've some of the mistakes I've made in the past is like I start designing workflows and processes or handbooks around people that shouldn't just be in the organization in the first place. And it was hard for me to reconcile that because I had this like sense of like,
Yeah.
I need to be a better leader. I could turn things around. It's me, not them. And then at some point it's like, oh no, seriously, it is them. And it's not saying it's like them as a human. It's just them in this work environment. It's not the right
Yeah.
fit.
Yeah, I think that's right on. And I can give you a few different examples of that, but I'd say like I originally would ask like, okay, what's the best for that individual person? And really the question should have been, what's the best for the business? And so I had instances where people were like doing a good job in their role, but they wanted more exposure to something, or they wanted that. And like I have multiple examples where I like created a new role for someone, or even like looked at opening a new business line and like put those things together, and then they quit, and somehow they're also like they quit shortly after that, and they're also somehow resentful for it. It's like, well, and so I think there's elements of that that certainly
That's
come
too
up.
real. That's too real of an example. Yeah. Yeah.
Yeah, so like that kind of stuff happens. I also think that like I ran a very transparent and made my transparent organization, and I made myself very accessible, which I think a lot of people appreciate. I think there also can be confusion there where you have employees who confuse the ability to share their opinion and share their thoughts as a mandate for me to do something about it. And like, nothing against a particular person, but when someone's in the second year of their career and they're telling me some grand idea they have, and it is a terrible idea. Like, I can't implement that. Like, that's a terrible idea. I want to be supportive in the fact that they're bringing this, but then like 3 months later, they're upset why I didn't implement something that I never agreed to. Like, I just agreed to listen to them. So I don't, there's downsides to that too. Like you're saying, you want to create that infrastructure, that atmosphere, but it is not necessarily the best.
It really is. It's such a different skill set, and I think so much of it is frankly not innate. I remember an old coach of mine was saying, like being in that management seat's just a different world because I mean, imagine you're out with your friends at a bar, your friend tells a joke, and it's like it just doesn't land very well. You don't step aside with them and be like, listen, let me give you some feedback. Here's what you could do. You just kind of like chuckle and you move on. You just chuckle and you move on because like you're like it's so weird to pull people aside and coach unless I mean there are some people that might just have this like coach's heart in some kind of way. Like, like I feel like Bill Campbell from Intuit, people have written a lot about him as kind of having this like coaches, but I don't know for the rest of us civilians, it's like, you have to be like, oh, I have to explicitly like tell you thanks for sharing, but this is not a good idea. And you might push on me, but and argue with me, but like eventually we have to stop having this conversation and move on. And
Yeah.
but if I don't say that, like it could linger forever, and
Yeah,
that's what
yeah,
drives me
yeah.
of it.
And also the other way too, if you tell a joke and people laugh harder than they should, then it's sort of a suspect sort of situation. But you're right on in that sense. And I think some of it, like, I don't think of myself as like a very arrogant person. And in fact, like sometimes I'm embarrassed to even say some of this stuff, but like there comes a time I think when, you've established yourself in a business and then you have someone who is early in their career have some ideas, and like you kind of need to sit them down and be like, you're in your role for a reason and I'm in my role for a reason. Like you're not perfect at it, I'm not perfect at it, like I'm going to make mistakes and things like that, but like my experience, my judgment, my risk that I've taken, all of those things amount to the fact that I'm in my role. So don't confuse my role for your ability to do it just because you think you can see it, or something like that. And like that's not the perfect wording or whatever, but I think like sometimes like being explicit in that is important. It's like, you've taken the risk, you also own the accountability. So yeah, you're the guy in the seat and whatever, and you make a decision. Hey, if it goes great, well, but if it doesn't, you have to own 100% of that. You have consequences there. I say at 45 headcount, we had 45 families to feed. Like that's what I thought about every night when I went to bed. I have 45 families that I'm responsible for. And so, with that comes kind of different levels of accountability and sort of like how you operate yourself.
100%. Well, at that 45 level, what were your priorities in a given week? Where were you spending most of your time at that level?
So I think this is where like it sort of deviates for me. Like I loved building the business, but we got to a point where it wasn't as fun for me. And I think like I used to say I loved building it, I didn't love operating it. And how I think I articulate it now is like the job of a CEO founder is like you're just assessing the problems with the business and you're prioritizing your time to fix them. And I feel like when I was building the business, there were tons of problems we were dealing with, fixing, whatever. And those problems, when I solved them, those facilitated growth. And that gave me energy. It gave me excitement. I felt when we got to the point where we were like in the 40s, whatever, of headcount, like I was fixing problems that didn't feel like they were facilitating growth. They were just like, I sort of jokingly say, like, I'd get to work and my first question to the team is like, what problem did I not create that I now have to solve? It's like those kind of things where I just didn't feel like I was getting much value and as much like interest and excitement.
What's an example, real or I mean, it could be.
Yeah, no, I mean, it's just like, again, trying to be available for employees. And like I had one employee who we had pretty generous benefits and stuff like that. We had 20 days of paid vacation plus another 10 holidays. So, you basically had more than a month off per year. And we also had a program where we paid for part of an MBA program. And like he came to me, he had a trip for his MBA program that would take him out of the country for a week and he'd miss work, which is great. I'm really supportive of that. And I'm just thinking about all the support we have as a small company, like good benefits program, paying for part of the MBA, really, competitive. And we didn't have types of PTO either. Just take it for whatever you wanted. And he was asking for more PTO. And it was just like, what am I missing here? Like, why am I spending time kind of resolve this when an employee, which I think should be grateful for kind of like how much we're extending ourselves and how much expense we're putting out there, is like sort of, basically trying to negotiate additional vacation time for something that's like not really related to their work at all. And so like that would be one where like, spending a half an hour there and then talking with the team about, do we need a new policy? And like, I love building the business, not necessarily like tweaking company policy and stuff like that.
100%. So at some point in your journey, you look up 45 people, about 10 million. Like you said, you love to grow it. Operating is less than ideal for you. What was the sale process like? Were you getting inbound requests? Did you get a broker? Help me unpack what that journey looked like.
A little inbound request. I think I didn't necessarily start the process to sell. Also, to be clear, like I started, like I felt like the business would be served better if I had some support, whether that was like a COO or investment or an advisory board or maybe we team up with a larger firm, something like that. And so I just basically sat down and I put together a list of a bunch of different contacts. And like what ended up being the sale process is I listed about 30 companies that I knew, like financial and sort of strategic potential buyers. I sent them all kind of a stupid message that was like, in a theoretical world, like a hypothetical world, if a hypothetical like business like Calculate were to sell itself, would you be interested? And so that's kind of how it started. And so I got like 30 or so, like reach out to about 30 folks, had about 20 conversations. And we had like about 10 of them became very serious. We didn't get an offer from all of them, but maybe 7 or 8 offers or something like that. So a good mix of kind of offers. And so I ran the process myself. There was no outside broker. I just kind of like ran with it. And, I had some banking experience earlier in my career. So kind of ran the data room and did things like that. Built decks, like a little sim, if you will, and kind of went from there.
So from, hey, I'm going to send this email to ink is dried, woohoo. Like how long was that time period?
Yeah, so probably February of 23, I started looking, and we closed Thanksgiving of 23. And like within there also was a broken deal. So got pretty close on one deal. We got to like 3 days within closing and it fell apart. So it's almost like within that time period, I did 2 deals without the actual like closing and check cutting on the first one. So it was pretty much, consumed me for all of 2023.
Yeah. What were the most surprising things that went well, and what were the more kind of draining or unexpected obstacles you had to think about during
Yeah.
that?
You know what? I think a lot of people who haven't been through it say like, or who give you advice are like, oh, diligence is a lot or whatever. And I didn't think diligence was terrible experience because I think A, it was pretty organized. And B, it's just like, you're just answering questions about the business. So if you've like built an honest and clean business, like that's easy.
Yeah.
But I think what no one can prepare you for is like the amount of mental real estate doing a deal takes, from like negotiating the contract to this, or like, the potential buyer is this, or they're positioning themselves that way. It's like, well, is this a sign of this? Should I go for this? Like, so just like basically is all consuming mentally for those months that you're negotiating, and not everything necessarily that you want, they don't want, so it's like finding common ground. And then there's just a lot in limbo. And I think you have to be mentally prepared for the deal not to go through, but obviously you're working really hard to make it happen. And so you feel the pressure of that, and you feel kind of the term I use is mental real estate. It just takes up so much of the space of your brain.
I guess because there's so much game theory, you're like, well, should I? It's like one of those things. Like I don't know if this came up. It's just like, okay, well, I want to sell, and they're gonna want me. They're gonna retain me, and they said 2 years. Maybe I'll come back for 1 year. It's not that I care about 2 years. I just want to have the option to leaving after 1 year. So you're like, but I don't want to scare them to think I'm not committed to staying. I just don't like things that restrict my freedom.
Yeah.
Right. And so you're like, should I push? Should I not push? Like, for all kinds of things.
Yeah. And I think you really like going through that, you really identify like risk is not an emotional thing. Risk is a price, and not to be super capitalist about it, but like you put together things, and some of it's like, okay, if this happens, then is that your fault or is it their responsibility, whatever. And I think you just assess all those little pieces like, okay, you're talking about like you want the option. Okay, there's a risk that you won't have the option to leave after a year. What is the price of you to that? Is that, and then you basically have to say yes to all those things you kind of don't want. And then if you add up all those, does that add up to the price of the business, the price of the sale or whatever it is? And also the structure of it. I think like, I didn't do a lot of negotiating around the price, the like total price of the deal, but the structure was important in terms of when and how it's paid out and those kind of elements. So, and I think now in the accounting space, as things have transitioned from 25 years ago, every deal was basically an equity rollover, and you became a partner in that new business. To financial buyers have changed things. Even strategic buyers, a lot of them are offering more than 50% at closing, and a lot of guaranteed payments or earnouts on certain structures and things of that nature.
How long did you stay at the acquiring firm?
Yeah, I wasn't there too long. I was there just for 3 months. So I think for me, like I wasn't going to be, in my instance, I wasn't going to be the CEO of the next company. It was a sort of like PE-backed merger. So I wasn't going to be the ongoing CEO. I was there for sort of transition stuff, and was able to support that for the first few months, and then kind of went on my way to kind of explore other entrepreneurial stuff since then.
Very cool. Well, if somebody wants to reach out, say thank you, learn more about what you're up to, tell us a little bit more, A, what you're up to, and then B, how folks can connect with you.
Yeah. So one sort of interesting caveat, as I mentioned, we built a software within that previous company, Calculate. And then that software basically was so good for us, we're like, other people can use this too, and spun it out and started selling it to other accounting firms. So I've rejoined that business and sort of sit front of house, kind of chief revenue officer role, sales, marketing, customer support. And so that's where I'm spending a lot of my time, and it's fun to build. It's very different to sell a product than to sell a service, but I think I've got a little bit of an edge when I go into a call and be like, hey, you're running an outsourced CFO practice, and I had one myself. But that's where I'm spending most of my time. The company's called Amalgam. You can find it at amalgam.me. And my email address is just joe@amalgam.me. And when we distribute, you can include that information too, David.
For sure. And what are some of the common use cases or pain points that somebody listening, they'll be like, oh, I should reach out to Joe about Amalgam?
Yeah, for sure. So the beauty of Amalgam is that it connects all those disparate data systems you're using. So let's say Stripe, Shopify, Amazon, Gusto, whatever you're using on that side, and also connects that to your general ledger system. So I can pull data from Stripe right into my workbook, and that workbook can also create, sets of journal entries and things of that nature. So monthly close, book rebuilds, financial reporting, that kind of stuff. It's saving, we save an average of probably 20 hours per month per user. So, put that on your hourly rate and think about how much new revenue you're able to produce.
I love it. Well, I highly encourage everybody listening to go check that out. Connect with Joe. Go check out his site. Connect with him on LinkedIn. Everything will be linked up at jetpackworkflow.com/blog, jetpackworkflow.com/blog. We'll do the site. We'll do the contact information. Enjoyed today's interview. Leave a review. If you really enjoyed it, share it any way you want to. Joe, thanks for coming on the show.
It's a pleasure. Thanks so much. This is fun.